Hello, folks. Brandon Chapman today. It's another edition of Theo Night Video for Monday, July 25th, 2022. Again, Brandon Chapman with you today. It's an interesting day. Not a lot going on in the market, fading a little bit. The title of today's sessions is Ag and Energy Lifted as Short Squeeze appears to be fading ahead of the Fed. So we got a big week this week in terms of data. We've got the FOMC policy statement on Wednesday. We got advanced Q2 GDP coming up as well. Again, that's on Thursday, for example. Just a lot of stuff going on that could potentially move the market, which just shows we have a scenario where we could really be starting to build a potential move or in terms of increase in volatility in the market. We'll talk a bit about that. And Don's video on Friday certainly outlined that as well. We're going to get a number of trades kind of aligning with this stagflationary type setup that's posturing right now. We're going to get Mosaic, TLT, GE, Silver, PBR, RIOT, BITO, and I got some other stuff as well. But that's the direction we'll kind of take things for today. But, again, you look at the market, not a lot of movement. We're just kind of clinging here. And as you look at the rally that we've experienced over the last little bit over a week, you wonder, do we have the energy to carry us towards the highs at 415 or more so to carry us towards the lows? The risk right now has to be to the downside with so much potential negativity out there. And I realize that a GDP print, the advance is the first estimate for Q2. We're all bracing for a rather negative print. Of course, the White House out there saying, hey, 2 quarters of negative GDP does not make a recession. No, but it's a technical recession. The NBER actually announces when we're officially in recession. The only problem is by the time they announce it, we're probably about coming out of it. So, it's one of those situations where you got to be thinking ahead a little bit. If you wait for these lagging data kind of indicators to tell you you're in a bear market, you're in a recession, as a trader, you're probably well behind the curve. So as we look at how much the market's rallied, it's reasonable to look at this and say, I should probably, maybe I should take some profits here. If you got some long options, you can roll them, you can close them, verticals, you could even roll or close. Because right now, what it looks like, and this is my high short interest watch list over here. And again, nothing special, but this is one that's 20% plus. You look at the numbers of stocks that are up and the numbers of stocks that are down, and you realize the short squeeze right now is starting to fade a little bit. The best performing stock today is actually Ring Energy. So the idea that, we are seeing this kind of stagflationary scenario playing out, negative GDP numbers. We're looking at rising energy and rising agriculture. This is something I called out last Wednesday to watch. You're seeing a furthering in that movement today. I'll show you my highest short interest, greater than 5% of the float. Again, more down than up. Look at the ones that are up here. Uranium, UEC, news coming out of Germany. They're wondering, how are we going to heat our homes in the winter? Again, Russians kind of cutting off some of the flows through Nord Stream. You've got Southwestern, a huge move today of 9%. We've kind of talked about the idea that natural gas may start to move. Guess what? The last couple of weeks, we're rallying back up towards highs at 950 again. You look at it. Even rigs up 7% today, potentially putting in a higher low versus the low back on the 14th. Centennial Resource, you've got Oxy in here. Tellurian, that's a natural gas company as well. Other natural gas stocks like Range Resources, RRC, big move. Energy Transfer Partners, a little more midstream in that, but it's making a big move today, a breakout. Volume isn't tremendous, but it's a little higher than it's been the last few days. But the idea being is that we're in this situation right now where food and agriculture and energy are rising. The short squeeze is fading, and we're now potentially forming maybe a short-term high here. Now, obviously, if energy doesn't decline a lot, the S&P may kind of hold up in here, but obviously the risk for the broader market is this. Again, we start to see the Fed become hawkish, and then we get a rather negative Q2 GDP print. Does that really put the market in a position where saying, look, this just doesn't look good? The Fed is going to hike into a very negative result, and it's not a question whether they should or shouldn't necessarily, but it's just a matter of it's unusual to see the data weakening, and yet they're pressured to continue to raise rates. You think about 2018 in December when the Fed raised rates, only to have to basically quickly backtrack as the markets begin to stumble. But we're in a very different position right now where supply of food and energy is being compromised, And as a result, prices are going to remain high, stubbornly high, despite the fact there are broader kind of disinflationary or negative pressures economically that are forced, that again are hurting the broader economy. Anyway, so we're in a very, very interesting position, and this is what we call stagflation. Now, normally stagflation would be very bullish for gold, for example. Oops, let's go /GC. Gold, however, is down today, right? You look at /SI, that's silver. Silver's down today. Gold and silver, you can look at ETFs as well, SLV. We're in a situation where metals are not experiencing the strength. Why? Why is it that silver, and particularly gold, is losing right now? Meanwhile, we have inflation prints. We're going to get PCE at the end of the week as well. Personal consumption expenditures. Meanwhile, inflation gauges are high. Well, again, it's easy to understand once you recognize the fact that the Fed is tightening, right? Tightening policy. They're trying to reduce the supply of money. And in this process, generally that leads to dollar strength and gold weakness. But if we're talking about a second quarter GDP print that's negative, maybe less than, we're talking about maybe more than -1.5%. Now all of a sudden, what happens towards the end of the year? Does the pressure become too much that the Fed then has to backtrack? Now, you can look at Fed funds futures /ZQ, and in this red line represents what the projected Fed funds rate. That's what they're trading based on, right? You look out here, for example, that's the February meeting. We're starting to price in the potential of a rate cut, right? Because we're seeing the lines lower here than it is there. You'll see how much things have changed since June as they're ramping up, thinking, inflation. The Fed's going to go north of 4%. No, they're not expecting that anymore. In fact, by May, they're expecting the Fed to potentially cut once or twice. And all of a sudden, you're looking over here, the Fed funds rate is what, a little over 3%? By next spring, 3.25%. Again, this is 30-day Fed funds future. So again, we're looking at basically, September. Now we're looking at August and in September here. Again, we're basically starting to price in the Fed rate increase for this week. Then all of a sudden, what happens? We start to stall out. Maybe we see a rate increase going in October, maybe a little one in November, and then we start to at November. At that point, they're basically on hold. So recognize that we're maybe escalating quickly into the Fed raising rates in a recession, and then maybe quickly backtracking. Some feel maybe by November, but the market's pricing in by early next year. Started pricing a small probability of a rate cut. And again, this really cements that stagflationary scenario, in which, again, once the Fed begins to cut rates, this could be very, very good for gold and silver. Today in the silver market for SLV specifically, SLV, a September expiration here. Sorry, I was messing around there. September expiration. We're looking at the 19 strike on SLV for September. Sorry, no, that's not the right one. The wrong one here. Dang it. I'm missing it. All right, maybe you have to come back to that one. I thought it was September. Now all of a sudden I'm losing it here. 21 call and put. That was for 19 Jan. There's some Septembers in here too. 23, 25. I'm not sure why it's not showing here. 15 September. Sorry. Sep 23. That's what it was. Forgot to write the 23. Anyway, so we look at our 15 Sep 23. You're seeing this being built in here, right? We're rolling down the 25 to a 23. I should have didn't write down the year. Anyway, we're seeing that roll down to the 23 strikes. So there's interest that's already been built. They're re-engaging, thinking we may be nearing a point where silver may move. I still think it's a little bit earlier, as I've said before, with regards to gold and silver, but we may be only months away here before we might see a very big move in that market. And again, you look at energy /CL, you're seeing that oil prices, right, starting to firm up at the 95 level. We already looked at natural gas has made a huge move recently. Stocks like Antero, big move. This one we've been really bullish on the last couple of weeks. Back to unusual option activity I talked about about a week and a half ago at support down there. BTU, this kind of is a crossroads of coal also aligning with high short interest, maybe breaking out here ahead of the earnings. So again, look at the consolidation phase, expecting maybe a breakout on the earnings could push it higher. We'll see, but it certainly seems like coal demand is escalating, and BT is kind of the center of that with some unusual option activity the last couple of weeks and high short interest, and obviously in the energy space, right? So again, that's on kind of the energy front. When you think about agriculture, /ZW, we're looking at wheat. Is wheat going to firm up here? I mean, what's the planting season going to look like? Your anecdotal information about withering crops, et cetera, drought, et cetera. Again, I mean, ag prices are down a bit. We see wheat release from the Ukraine. And there's so much like news out there, but what's really happening? And this is where you look at the markets. They're taking that information and they're boiling it down into some expectations. And one of the interesting phenomena we've seen over the last week here is we're seeing more movement in the options market for agriculture. Mosaic, and I think I talked about in the video last Wednesday when Don and I switched, certainly spent time of it during our TheoTrade members at the close session and other sessions through the week, kind of looking at the agricultural commodity unusual option activity. And today it's just a weekly, but again, pressuring, moving the stock, creating that gamma kind of squeeze here. You look out here at the 54 strike for the 29 July, mostly bought, and we're looking at some potential upside of 54 in the near term. Again, you're looking at the move today, not a lot of volume. We have earnings coming up. There's lots of things going on, but we're seeing movement right now in agriculture. The one last Wednesday was Bungie, for example, held Thursday, Friday, breaking out today. It has earnings coming up as well. So again, earnings can create some potential volatility here, but it is interesting. We're seeing this kind of reigniting of the agricultural commodity trade. CF Industries, for example, making a big move today, breaking resistance, albeit on lighter volume. But again, we're seeing just a little rotation right now, maybe some expectation. The earnings may come out better than expected. But again, we're looking for that pre-earnings run in a lot of these names. As we think about gold and commodities, it's hard not to talk about Bitcoin. So /BTC. If you guys have caught any of Don Kaufman's press release he's done, press engagement, whatever, he's certainly talked about the idea of more downside in Bitcoin. And it makes sense given the backdrop of Fed tightening, given the backdrop of reducing the money supply, that assets that are, again, tied to the dollar more closely should experience some negativity. And again, right now we're seeing Bitcoin roll over. And if the dollar strengthens a bit, we could see Bitcoin back down at 10,000 again. But as we look at some the periphery of Bitcoin, namely BITO, Bitcoin ETF, we're rolling over here, looking at least in the near term and maybe testing 1150. Now, when you look at today's option activity for the December expiration, you're seeing down here at the $10 strike price, about 6,000 contracts traded, mostly bought. $10 carries you below the most recent low. So it certainly looks like there's some out there that are taking that interest, thinking that, in the next little bit that Bitcoin, again, ETF by BITO may carry $10. And as you look at some of the holdings of this fund, like a RIOT, for example, it's rolling over today. And this is obviously more shorter term in nature at the 29. But you'll notice here at the 6.5 strike, a lot of activity, mostly bought, just kind of pointing to bearish activity being kind of created here. So if we see a situation as we approach the Fed raising rates, if they surprise, we start to see more dollar strength, this should have a weakness. This should create weakness and volatility in the markets. Generally speaking, we should see more downside in these Bitcoin related stocks and ETFs, and likely in Bitcoin as well. So again, this is a week that could be very, very difficult for risk assets. I'm throwing Bitcoin into the risk asset category, and particularly those that mine it, because man, they don't generate really much of any cash flows or free positive operating cash flow. But the stronger dollar, if that materializes, could really start to drive Bitcoin down, along with gold, along with silver. But kind of that glimmer of hope as we enter the fall. Do we start to see the Fed on hold? Do we start to see the potential and the talk of lowering rates. And this could really help create a bullish scenario in some of these products. But in the near term, the risk is, of course, to the downside. As we look at TNX, as the 10-year Treasury yield dropped a lot on Friday. So a lot of buying coming in. Today we're up a little bit. Again, just kind of a reflexive, kind of a dead cat bounce here per se. But when you look at TLT, this tracks kind of 20 to 30-year Treasury bonds prices. You got the TNX today selling off a little bit. But again, you look at TLT, strong 2-year auction. It's down a little bit today. But in this scenario, if the Fed is truly on hold at 3.5%, 3 to 3.5%, somewhere in that range, they don't push towards 4.5%. This opens the door for a product like TLT, if they start to cut, to really begin to surge. And there was a trade day that really kind of pointed to this, kind of like, fit the bill. It was a November expiration, out of the money out here, call spread 135, 140. The skew, you were buying about 22%, selling 23. It's slightly favorable. There's a little bit of edge in the premium, but you're risking very little for a really, for a potentially large move. $5 spread here, 135, 140. The spread costs you maybe 30, 40 cents. You risk 30 to 40 cents to make, six, is that a $5 spread? Potentially making 440. That's not terrible. And so when you think about that, you're like, man, if the Fed starts to cut, we could reasonably beat a 140 very, very quickly. November might be a little bit of a stretch. You might give yourself more time, but you have an out of the money spread here that's pretty cheap. You could potentially roll it if we don't get that move by November. Maybe roll it for a few cents if maybe even change strikes if we drop a little bit. If the Fed looks like it may raise a little more, but the reality is, do you think it's going below 110, or do you think we may come back and retest? But really, we're en route to 155, possibly even higher. And this is a place you might start to consider, even from a longer term perspective, looking at TLT. And if the Fed starts to cut rates, think about like something like SHI. We're priced in the Fed rate cuts already. And, if the Fed starts to lower rates, the Fed rate increases, the Fed starts to lower rates, this has a chance to go up a lot. Not very volatile. You're talking treasuries, so very little risk. Potentially a reasonable amount of upside, maybe 5-6% or more, if the Fed goes back to ZIRP again. So as you think about where you might look at putting money, those are some areas to consider. TNK, we're talking shippers. This is what I talked about last week on Friday. TNK, NAT was one I was reviewing last week as well. Unusual option activity, buying calls and NAT. Again, these are tankers, companies, some near-term. This kind of ties in with the energy space. As we look at the bearish side in a stagflationary scenario, you don't expect that industrial stocks should do all that well. GE has earnings coming up before the market tomorrow. This could be a nice little bellwether to see how this is playing out. But we did see earlier today, some bearish option activity for the 29 July expiration down here at the $60 strike price. So again, going into today's announcement, I kind of talked about this one in my session earlier today, some bearish expectations on a pre-earnings run. Certainly makes sense that this industrial part of our economy, we may start to see some downgrades. So 3 things you look at: beating analyst estimates in terms of revenues and earnings, the stock going higher, and guidance that is positive. We may see all 3 going the other direction. So we'll see how that plays out tomorrow. But if we do see a real reversal here, stock breaking out to the upside with those 3 positives, probably unlikely. And the option activity certainly indicating that they're expecting otherwise. I mentioned PBR. PBR is it's a Brazilian energy company. Nice breakout today. This was a Jan 14 strike price. So again, we're looking at some upside here in PBR, dovetailing with the strength in energy. Stronger dollar, if that starts to pick up in the end of the week, could diminish some of the potential movement here. But if the Fed goes dovish, you could really start to see some of these emerging markets, something like this, playing into that weaker dollar in the near term and moving quickly higher. This was up 6% today and had really strong option activity earlier today. Mosaic. So let's tie it back to the agriculture. So Mosaic, some nicely today. Mosaic, it was the this weekly expiration here, but we're looking at 54 strikes. So again, some near term kind of gamma being created by these options. If we break through 54 this week, could really drive the stock higher in Mosaic. But again, some of that materializing today, specifically with agricultural commodities. Another one, we're talking about GE, but what about Ford? What are some of these companies that are auto producers? I mean, like, you just hear these anecdotes. I mean, is the consumer really able to absorb the increase in inventory? Obviously, Ford's made huge bets on the EV truck, pretty expensive truck, nonetheless. But again, are the consumers getting tapped? Well, as we look at Ford, they do have earnings coming up on the 27th, and this was for a weekly expiration, July 29th. And you'll see some upside here, maybe a lot of it kind of rolling here, but also down the put side, 1250 strike. And again, that's going to look mostly like put buying. You can come down here, look at today's option statistics. You'll see 66% at the ask. Not exactly just a scorcher today, but just a lot of action on that expiration. Similarly on the call side, not quite as much, but close. But again, there's a lot of interest expecting movement on this earnings coming up here. And that's, I guess, is on Wednesday. Wednesday morning. But anyway, so forward, some bearish activity there. Anyway, so as we go forward, I mean, look at how the market responds to Powell's statement, right? To the policy. Are they going to risk going 1%? Maybe. It's probably not going to happen. But as we've seen last announcement, things can change very, very quickly. Okay. So expect the unexpected and understand this week could have some significant volatility. So if you do take some upside shots, maybe make them intraday, otherwise make them limited in terms of the amount you have allocated into this week until we start to see things shake out. And we may see a head fake on Wednesday and may see things fade early next week, let's say on some sort of positive reaction to the Fed funds announcement on Wednesday. Anyway, folks, it's been a pleasure being with you. I hope this is helpful in kind of guiding your efforts and help you identify some bullish and bearish areas in the market considered for trade.